prices have still not corrected as much as they could have, even though the stocks have. I'd love to get your thoughts on real estate. The index is up 5% today. It's such a high beta sector. So much has gone wrong with it, but
I think that there will be. It has come to levels where a lot of people think it will not drop any further. There is value in this. So I think this kind of whipsaw movements you will see in the real estate stocks. As far as debt goes, yes, I think the debt is an important thing, because real estate, the thing is you should never fund it with debt, because the holding period for a real estate play can be 1 year to 10 years depending on where you are in the cycle. So if you're funding it with debt, the real estate part, there is a risk which you carry. The other call, I think the other thing is, I think bankers may also renew the debt, because they also don't want
defaults
and NPAs in their balance sheet. So I would think that things would pan out. It would take some time. It's not that the problem is the real estate industry is still holding on to prices which are unrealistic. You look at the balance sheet, in a very bad year, bad quarter, they had 50%, I think last time we mentioned, 50% PAT to sales. If they drop it to 10% PAT to sales, which means a price reduction of 30%, I think at that there would be buyers. So it's basically the industry which has to take this call, whether they want moderate but consistent cash flows, or they want to make and kill the golden goose.
But you know, real estate also, I don't know whether one can sort of, the market of course has been painting everything with a single brush, because the overall sentiment is very bleak, and you have your end product prices also falling. But the fact that a lot of the real estate consultants and analysts also point out is that a lot has to do with your model, and whether you have actually paid for the land on which you're building, or you're basically a converter or a developer, and you've gone in the form of a joint venture maybe with someone who actually owns that land, in which case your borrowing costs perhaps are not going to be that high. So let's say a peninsula land, for that matter, which has had internal land of its own, which it has then converted into and put out a development in, again, a market like Mumbai, which is of course a bit of an aberration market, tends to be stronger than the rest of the country, could do relatively better. So has the time at all come now to start looking at these differences and then look at any of these other companies for a longer term, 2 to 3 years horizon? Or is it still too risky?
I think it is still risky, because I think whatever models we are saying, I think all the models have been built on FDI money coming and partnering them in JVs. None of them had their own pockets. They either wanted to hit the capital markets or the JV partners. So one is, we don't have the kind of capital to do that. The second is, I think, is there a sustainability of earnings visibility in these companies over the next 10 years? The answer is no. You are valuing a land bank at X, Y, Z, whatever, coming to a value and giving it. So it's like a closed-ended mutual fund in that sense. So and it's a daily mark-to-market. That's what the market is doing. So you have to play it that way, because we don't have a mature real estate industry where you can then value a company based on earnings rather than on NAV. And NAV is like, I remember the prospectus of one of the companies. 2 independent valuers had come out with valuations which were almost matching to the last 1,000 rupees. Now, how is that possible?
I just love real estate. It reminds me of the auto sector of the time when nobody wanted to have anything to do with it. You cannot go wrong with a sell recommendation. You just can't go wrong with a sell recommendation. It's an analyst delight. Just come out there and put whatever thing you want, and you'll have enough reasons to justify it. The point about land bank is all fine. You paid for the land bank, it's out there. When are you going to sell it? That is the bottom line. See, if you've sunk money, that money was from your balance sheet. And to sell it, it needs to come to your P&L. Where are the transactions happening? Okay, that's just one aspect. My final point on this is, the funny part is, in the last week, I think I've seen one broker report which has done some kind of a tour all over Bombay, saying that, visited a few sites. And saying that, well, listen, construction is going on fine, and quality of construction is good, schedules are looking good, blah, blah, blah. I have no idea about what is selling out there.
You drop prices, it will sell. The problem is people are trying to hold on until the last dying moment.
My indicator on this is, when the last broker probably comes out who's still positive incrementally, when he comes out and puts a sell on the sector, that's your bottom. That's probably your bottom, because these are the these are the guys who find gloom and doom right when the inflection point is just about to happen. So that's my indicator. Once I see these kind of reports which are saying that, well, things are fine, that's where I'll probably say that, okay, maybe the bottom is somewhere near. Not now. Not now at all.
I don't know. I slightly have a differing point of view on this. I completely buy your point about them not having to raise debt. But I think if you just go back to the history of real estate companies, right from the time that DLF first filed its IPO prospectus in August 2006, you will see that these companies suddenly started reporting things on their balance sheets that did not exist a few years back. They suddenly had, things on the asset side of the balance sheet that did not really exist. The problem that the real estate companies have made is they've raised their money not to go out and acquire further land. They've raised this money to pay off the amount that they have that they should have spent to have acquired the land that they had over the past few years. Perfect point that the real estate industry in India is not mature. The way I look at it is it's predominantly a 2-year-old industry in India, a little over 2.5, because that is when the largest player in this country came out and went public, actually a little after that. And that's when the second largest player, i.e. Unitech, suddenly decided to get all the spotlight. You can argue that on pre-split, pre-bonus, pre-everything, Unitech went from 15 rupees to 15,000 rupees and then came off. But the fact is a lot of the spotlight came on it once DLF came out. Our real estate companies predominantly over here the promoters have a very different mindset. They're very family oriented. They're Delhi people after all, These guys are all Delhi boys. They're completely, I'm giving you a perfect psyche,
Yeah.
These guys are extremely family oriented. To come and try and convince them to come out and sell equity into their
Bombay
firm.
boys
And
on the
Bombay
phone.
builders
I'm
are
getting
not
better.
No, I'm going
The
to
biggest
come to
Bombay
it.
builders are not listed.
I tell you, I'm going to come to it. See, there's a certain mind frame. You cannot not raise debt. These guys will never sell their equity. If they had to do it, they would have placed it much before they had actually gone public to set a floor benchmark of their price before they even came in. It's not that hard for a Unitech or a DLF 3 years back when the market was going up to go out and do a PE deal to set a floor valuation for what they wanted to come into the market with. They didn't do that. Because they don't like to. That's the mind frame of the real estate companies in India. They're family models. I could go on about this as to where the promoters have actually come from. KP Singh is an ex-army man. Now you can just go back, you'll understand the mind frame. See, it's very easy to just come and look at a headline number, But I completely buy Bala's point about...
At the end of the day, it's a very opaque industry with an unholy nexus of politics, black money, mafia, everything. So in that, if as an analyst you are trying to pick value, I think it's a very difficult task.
Exactly, and that is where the analyst thought process comes in from. That if you are a management framework from a mind that it's going to tell you that you're not going to raise equity and you're not ready to part with your own stake in the company to raise money, and you're just going to keep going out and raising debt. And I was not wanting to go as far as what Bala just said, but some of the issues that he has raised, it itself around not even asset prices correcting is reason enough to come out and sell the sector, and that's where Anupam and his entire gang of evil come in. Sellers is a delight.
Ex-gang.
Ex-gang.
Thank you.
Anyways.